Welcome back, boys. Today, no trades taken, but still a good day. Had an exam, missed out on a potential short up here, but yeah, let's just get right into this. So, coming into the market, what do we see? We see a huge SMT. We look at this high, connecting to this high. This high is from March 17th. This one is from March 19th. 2 days later, we can go on to ES, and we see ES makes a higher high, but then NQ makes a lower high. So that's a potential indication of a reversal. And what do? Price dumps. So that I had noted in my mind that price is probably going to be bearish today. But coming into market, we see in pre-market we just dump, completely breaking structure, inversing all these bullish gaps. So coming to the market today, I mean last night after yesterday's price action, I was bullish for these highs, right? But then we made this SMT and we sell off hard. So when I come into the market in the morning, my objective is to figure out what is my target for the day. So market opens right around here at the start of this huge green candle. And originally, my target were these lows. I have all mapped out here because you see like this huge imbalance. I'm anticipating price to do something like this. I like to take the high of the range from this up close candle up here down to this last bearish candle. And I like to basically wait for price to show me some sort of price action that looks like this. So price to come up, boom, 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 come up into this premium, and then boom, inverse the for value gap or break structure, and then boom, continue down for these lows, right? But what does price do? As soon as the market opens, we take out these some pre-market lows, and then a huge displacement up, breaking 5-minute and 15-minute structure. So my target for the day was this equilibrium level of this huge bearish move, and I was targeting these gaps to be filled. Because I look at the 5 and 15-minute structure, that shows me where price is going. So I saw that we're bullish in the 5 and 15 minutes. So I'm like, okay, what are some targets for on the higher time frame that is basically like where is price going on the higher time frame, and what is aligning higher time frame with lower time frame. Lower time frame we're bullish, so on the higher time frame, what could we be seeking? I thought we were gonna go and try to fill some of these imbalances. As you see here, there's a huge hourly one here, boom, 2 huge hourly for value gaps, but your boy got no entry really. Look on the 5-minute. We displace up here, and yeah, I was thinking about potentially just taking a long right after this huge displacing candle, but this stop loss is way too big for my liking, and I didn't want to be longing into an equilibrium point. So if anything, if I was going to do something like that, I'd want to take it after this huge 1-minute impulse and do something like this. But even that, the risk to reward is just not there. The stop loss is too big in my opinion. So what was I doing? I was waiting for price to at some point retrace into one of these fair value gaps, as you see here. But we just never really got an entry. And the one potential trade I missed out on is here. I'm not going to lie, I hesitated. It was in this fair value gap. But as I said right before, this fair value gap is insignificant because in the higher time frame, look at where we're at. At this point, we're in this huge hourly for value gap, an hourly premium, and we're bearish on the hourly. So I didn't really feel confident in continuing longs above this equilibrium level right here. So I was just going to sit on the sideline, but my mistake is like I should be able to identify the strength in this move up and then be able to switch my bias from being short and getting a continuation down to first taking out some form of liquidity, as in these highs up here. After seeing this huge displacement candle and then another one providing a gap and inversing these two big fair value gaps, I should have just moved my target to these highs, equal highs, highs here, potentially this high. But as we see, we only take out these highs from yesterday, the high of the day yesterday, and we immediately sell off. But we can go further down and check out the long opportunity I missed out on. So I was looking on the chart, and I might have even went down to the 30-second, which is pretty degenerate, but I like it because it's kind of clear, right? Gives me more clarity. So we see price sweep down into my 5-minute imbalance, and we get a break of structure with a gap. So we could have done something like this and just target my DOL for the day, and boom, this would have been a beautiful 2-hour trade. But your boy was just too scared to take it. I didn't feel confident. I could have took one partial there, second partial here, but I just didn't feel confident in longing out of here, knowing that we're in such a, I don't know, like huge imbalance area on the 15-minute, and we're in such a premium of this range. Like, I wasn't sure that these high, I was thinking that these highs were going to hold and prices were going to continue to the downside, but that was a mistake on my part, because if price was actually bearish, we wouldn't have gotten this sort of retracement, you know? We would have gone, instead of seeing this big impulsive move up, we would have gotten a choppy, small move up like this, right? We're not going to see a move like this. Pretty much just a straight line up. Like this shows momentum and that we're seeking a high, and this is more like we're just retracing into an imbalance to continue going down. But you know, each day we learn. I'm happy I didn't force anything. I didn't take a loss, but that was that was the first good opportunity I had on today. So we sweep there, and then the second opportunity I had was to go short after seeing we took out this major liquidity level. What do? We break structure to the downside. Not on the 15-minute, but the 5-minute. We have to be always in alignment with the 5-minute order flow for the way I trade, at least. But as you see, right here, we break structure on the 5-minute. So once we break structure here, I can start to look for shorts. Now, I personally, at this point, I had an exam for one of my classes, so I couldn't really be on the charts for the next hour or two. But right before my exam at 11 something, I saw us break structure, and I was like, damn, dude, that's such an easy trade. You see how many gaps need to be filled. We just swept a key point of liquidity, and we break structure. I would honestly be open to even just placing the market order at this candle close, putting my stop loss above this for value gap, and targeting something like these lows or the bottom of this, or maybe this initial first for value gap. Like, dude, I could have made a fucking 4R trade possibly, but it's just obviously in hindsight, you know, guys. In hindsight, everything is clear as day. But we break structure, boom, 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 boom. The way I like to trade is I like to look at the structure in the 5-minute and try to see if there's some sort of imbalance we can take a 1-minute like trade out of. So we see there's no real imbalance anywhere along this point. We're just chopping. But then we get a huge displacement down here. And on the 15-minute, we make a fair value gap here. From this high to this low. Boom. And look what happens. Price comes into this point, this imbalance on the 15-minute, And on the 1 minute, we get a pretty clear confirmation. We get this candle close, which I could take as my entry. Just target these lows, for example, for an easy 1 to 5 R. Now the reason why I would take it after this candle is because I would want to see this structure point get broken. Once we get this candle close, I'm pretty confident that we're going to go down. I can even set a limit somewhere in between this fair value gap and target here for an even higher risk reward. Because as you see, there's an imbalance here. So maybe I can go on to the 30-second. If I want to get real dicey, this is a 1 minute fair value gap, and we can go and take a trade like this. Boom. Stop loss there. Target these equal lows down here for an even more precise entry. Again, taking this because we break structure here. That candle close out of this 1 minute gap. We could either set my stop loss to this high, but I would probably put it around this level, around this 30-second fair value gap, which is also the high right here. But that is another good trade because at this point you have to be pretty certain that price is going down all the way to continue to take these lows. But again, like even this play I wouldn't be too sure on because look, you're shorting in an extremely bullish range. Like we just completely shot up with every candle forming a fair value gap. Like how certain are you going to be to short into these bullish gaps? You know, like who knows which one of these gaps are going to hold. That's why today was a very low probability day in my opinion, because there's no clear target, there's no clear direction. We shoot up one way, sweep buy side, and we rubber band back down. But who knows if we're like forming a bullish price action and now we're going to continue back up. Like who knows if this is the target. Who knows if we're just trying to fill some of these bullish imbalances and continue going up. But like also in this imbalance, we see the 5 minute actually break structures to the upside, which was another reason why I wouldn't be too sure in taking that trade. These are just potential setups. These aren't really ones I would say I'm 100% would have taken if I was online. But these, I mean, could be decent. At this point, though, seeing how quickly we react off this high and we shoot back down, inversing everything, I maybe would be targeting these lows again. But again, like on the 15 minute, we're still technically bullish because this is the low that created this high. So I think it's more of a gamble at this point. Price action today was more of a gamble in my opinion, because you're either buying into extreme selling situations in terms of this huge down move. You're either buying into those imbalances, or you're selling into these huge buying imbalances. Like either way, if you guys see, either way there's imbalance. Like either way, I'm saying like you're either buying into these imbalances, or on this move you're either selling into these imbalances. Like I personally don't like taking trades that go against the huge momentum like that. Like I would be more interested in taking longs out of some of these imbalances, or taking shorts out of here. But price didn't show me that it wanted to do that. Price just showed me that it's boom going up to this high, and then we sweep break structure in the 5 minute, and that's price telling me, okay, we're doing a short-term reversal. But in my opinion, like how am I supposed to know where price is headed? Like price could be shooting for this equilibrium level, which is something why I would be open to taking shorts up here. But the fact that this setup happened right around equilibrium level, it would definitely be a trade where I would risk less. It's not a complete A plus setup. There wasn't any A plus setup today, honestly, in my opinion, except for maybe this one, because on this situation right here, where we're up here, we're boom up here. At least with this long here, at least with this long right here, we're so deep in the premium zone, like it's likely now that price is going to take out this high rather than continue to the downside. Because if price is really bearish, we're going to start reversing at around this point here. We're going to be doing something like this, then retracing here. We're not going to be going all the way up here. Like at this point, when we're up here, this is a more likely target than these lows. You know what I mean? So it's just a matter of using your experience and intuition to basically gauge where price is going. But the most likely trade would definitely be taking out this high. Your target being this high. How would you know we're going for that high? That's the question. That's the $1 million question. Nobody knows we were going for this high. You kind of just have to use your discretion. Like, okay, you gotta think to yourself, okay, we just broke structure with such momentum. Where could price be going? Are we filling these imbalances, or are we going for these highs? That's the question you gotta answer for yourself. Then frame your trade off of your answer to that question, because in my opinion, I didn't have an answer to that question, which is why I didn't take a trade. I'm not going to take a trade just because I see some pattern form. Like I need to have real conviction in where price wants to go. At this point though, when I was up here, I was pretty sure we're going to take out these highs up here. But again, at this level where the entry was, because the entry was somewhere around here, not this. The entry was out of this imbalance, so it was like right around here. I wasn't too sure where price was gonna go at this point. But yeah. I think the most solid trades today were either the long out of here, out of this imbalance. So let's map out these two trades. So the best boom. The best trades were boom out of here. 30-second for entries, elite, dude. So the best trades, in my opinion, were this stop loss here, entry at this high. That's the first trade, and the second trade, I think, is honestly just this short. After breaking structure, market ordering, stop loss above the imbalance, and we can target equilibrium. Let's see. Boom. Target equilibrium. Maybe have take profit at the beginning of this gap, then eventually have your final one right there. Those are my two, I guess, higher probability trades for the day. This break of structure on the 5 minute after sweeping such a key point of liquidity, either that trade or, but look at, again, this is a 60-point stop loss. That's really big for me. That is really big. A 60-point stop. If I take 5 micros, what is that? 60-point stop, brother. Times 2. That's $120 per micro. If I took 5 micros, that would be $600 risk, which honestly would have fucking passed my combine. That would have netted me the $53,000. So, yeah. This is a good day to take some notes, learn from it, but that is my basic analysis for today's price. No real high conviction trades. These are the 3 that could have worked out according to my strategy, but none of these, I guess maybe these 2 were A+. This one was lower probability because we're in such a discount of such a bullish leg. Like, you'd have to be ballsy shorting over here just because this 15-minute gap. It's a ballsy move, man. It really is. But again, you can have the gap and just see what price does. Like, if price reacts off the gap, then price probably is going lower. Same thing with this gap here. Like, if price comes and we just disrespect it, then that's price saying, okay, we're not actually bullish. We're not actually going for these highs. But the fact that price comes in this gap and we get a huge displacing candle, that's the market telling us, okay, we're respecting this gap. We're going to that high. And us sweeping this high, forming a very, very nice doji candle, and then breaking structure right away in 2 5-minute candles, that's also price showing us that, okay, we took out a lot of stops after this high. We're now looking to go lower to fill in some imbalance or what's it called? Fill equilibrium levels. But yeah, it just depends, you know. It really just depends on how you see the market. But yeah, that'll do it for today. Thanks for watching. I still have 2 weeks to pass this combine before the rebuild date. So on most trades going forward, I'm gonna be risking 5 micros, just because I really want to pass it before I get billed another $50. If I get billed another $50, I might as well just at least YOLO this and try to pass another one, because I don't want to spend $150 on one combine. To me, that's a waste of money, because, you know what I mean? I'm not going to spend one combine can only get me so many payouts. I need to stack combines, and I need to pass multiple combines to actually make real money. One combine can only get me around $500 the first payout. So it's all about scaling and stacking these accounts together. You're not going to make money from just one account, bro. You can, but very little money. All right, but that'll do it for today. Peace out, boys. Have a good Thursday night. Enjoy yourselves. Don't get too hammered. Market's open tomorrow. Stay responsible. Peace out, guys. Good luck.